Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Let's bring in our guest. Ahmed Riesgo is with us. He is the CIO of Insigneo, joining us from Miami, Florida. Ahmed, thank you so much for being with us. Help me make sense of some of the price action that we have seen in the last several hours. I mean, a lot of the yen carry trade being unwound, concern about the Fed being behind the curve, maybe some criticism on the part of the Bank of Japan. How do you make sense of this?
Right. So obviously when markets have the run that they've had over the past couple of days, people are always searching and grasping for answers. Let's kind of cut through the noise. Certainly there's been a repricing of U.S. recessionary risks, a lot of that due to the weak employment report. But you're seeing some of the moves being exacerbated by technicals and other trading elements, such as the yen, the unwinding of yen carry trades around the world, which have exacerbated the losses in some of the more high-flying sectors. And usually when you do get a margin call and you need to unwind a carry trade, you usually seek to sell what has been performing the best. And obviously the Mag 7, the mega cap techs would certainly qualify for that, although lately they've obviously given back a lot of their gains for the year.
What is your sense of the recession risks in the U.S. now, given the jobs print, though? I mean, the market reaction has been seen as a bit overdone. People have called it an overreaction, but some of the recession indicators are also flashing warning signs.
Yeah, so we've sort of had the long-held view here at Insigneo throughout the year that the market has been systematically underpricing recession risks. The market was basically priced for a Goldilocks scenario, a situation where the Fed was going to be able to cut rates and the economy was going to slow, but slow just enough to not trigger an outright contraction. We always thought that that was a little bit too thin of a needle to thread. And so we do think that some of those risks are being priced in. Currently, where things stand in our subjective recessionary probabilities, we kind of have the probability of a U.S. recession pegged at 40%. So we still think there's some runway for this to price out. I think this growth scare is going to last for a while, and the volatility in markets is going to last for a while until we definitively get some word as to whether or not finally the U.S. will fall into a recession or not.
Okay, amid this period of adjustment for, I think, both monetary policy into the economy as well as the market reaction, do you think the Federal Reserve is, just going to ignore what we're seeing in markets?
Well, they have to, again, here, they also need to walk a fine line because the Fed has, remember, two mandates. It's not just obviously preventing recessions, but also maintaining inflation under control. I think if you were to ask the Fed in a quiet room with no reporters, they would probably tell you, look, we're willing to risk the chances of a mild recession as long as we get inflation under control and inflation expectations under control. They don't want those unanchored. It's much more difficult for the Fed to bring those back under control if they were to shoot up again than it is for the Fed to cut rates in the face of a mild recession. So the risk to them, I think they rather err on the side of causing a mild recession if that means finally being able to put the inflation genie back in the bottle. Now, obviously, they would prefer the scenario where they can thread the needle, but that is exceedingly difficult to do.
So I'm seeing a recovery right now in the E-mini futures contracts for the American market that would imply some positivity in the Tuesday session. Does tech regain leadership here on the upside?
Well, I think you could see a bit of a bounce in tech. Obviously, they've had a very strong sell-off, so the technicals look oversold in that space. Now, for them to regain market leadership the way that they were earlier in the year, that I also find exceedingly difficult. I think it's much more likely that you've passed the baton onto new sectors. Some of the sectors we like for the rest of the year are some of the more defensive sectors of the market. We especially like utilities, we like healthcare, and we like the consumer staples.
What about the price action that we've been seeing in the past three sessions, today excluding in Japan? Do you think that is also an overreaction by markets, or is it more, this triple whammy of the Fed moving too slow and the BOJ maybe being too aggressive on hikes?
Yeah, I think what you're likely to see here in the days ahead, which is if the yen continues its meteoric rise, you could potentially see some central bank intervention led by the Bank of Japan, because I do think, just a few days ago, the central bank governor in Japan was warning that the yen was too weak. Now it's too strong. The move is important. Remember, with currency moves, the magnitude is important and the slope of the curve is important. If they're too quick, too fast, that's disruptive for the financial system. It's disruptive for societies. So central banks don't like to see that. So yes, I would think that some of that trade would slightly be reversed here, and you could see the Japanese equity market rebound here. I have to say, on a longer term basis, we do find the Japanese equity market to be quite attractive. We think some of the fundamentals there position it for being one of the better performing equity markets over the next several years, despite this current episode.
Ahmed, good stuff. Thank you so much for being with us. Ahmed Riesgo, he is the CIO of Insigneo, joining us from Miami, Florida. Nick Schoenmaker. He is client portfolio manager at Drummond Capital. He joins us from Sydney. Nick, thanks for making time. It seems like a perfect storm over the last couple of hours. I mean, how do you make sense of the price action right now?
Yeah, good morning. Thanks for having me back on. Certainly massive amounts of volatility. And if you're putting things into context, it was only just recently that markets were certainly sizzling and we had a positive surprise on US GDP. So I think there's a few things going on at the moment. You had weak economic data, the seasonal weakness, stretch positioning. There was crowding in AI. Underwhelming earnings with 6 of the 7 Mag 7 disappointing. And on top of that, we've seen massive amounts of volatility manifest itself through the currency markets, given the unwinding of the yen carry trade. And I guess one thing I'd say on that is that usually when you have volatility manifested through currency markets, the sell-off in equities tend to be very sharp, but not too prolonged. So I think fears of recession at this stage are probably a little bit overdone, as is the easing priced into the US rate market at the moment.
What do you make of the concerns that, maybe US recession fears might be overdone, but that the Fed is behind the curve given what we're seeing in the jobs market?
Yeah, look, it's a good point, and it is one data print, and as you were mentioning just on the call earlier on, we did see that ISM services data surprised to the upside just yesterday. Look, there's nothing structurally broken. If we go back to periods like 2008 and the GFC, we had issues in the housing market. If we go back to 2000, where we had exuberance in tech, there's obviously massive differences now with earnings and valuation. So nothing in terms of the fundamentals has changed too much from just one data print now. But if we saw a second consecutive weak non-farm payrolls report, then those 50 basis points cuts being now priced in both September and November could come to materialise. But I think it's a little bit premature.
Averill and I were talking a short while ago about the sell-off that we had Monday in Japan with the Nikkei down 12%.
Yeah.
A lot of that yen carry we know was being unwound. I'm wondering whether or not you're concerned about possible problems in the banking system in Japan, whether there may be a little bit of stress going on under the hood. One of the reasons that financials were very hard hit in the Monday session, I think the entire group was down about 16%.
Yeah, that was really the driver of the weakness in Japanese equities yesterday, which I think, again, you may have said earlier in your program, is the weakest day that we've seen since 1987 in Japan. So with lower policy rates, you had the 10-year JGB yield get back down below 1%. It's about 0.89 now. So lower yields tend to be problematic for banks. This whole yen carry trade thing is something we've been watching for a few years now, because it's been a massive phenomena for many years, and it can ultimately affect every asset class, despite the fact that we've seen these massive rallies in US Treasuries. Japan is the biggest buyer and owner of US Treasuries. They're massive buyers of structured credit. So it actually can be a major global macro event that can affect every asset class, but it's so far being transmitted through equities and some currency. But so watching the bond market, both rates and credit, is really important with the yen carry trade. And I think the Bank of Japan has done the right thing, taking rates, first of all, out of negative territory and then having them out 25 basis points. Their inflation target's been within their band for over a couple of years now. So it didn't make sense to have such ultra-accommodative policy setting where the rest of the G10 has got materially higher rates. That was obviously always going to lead to financial systemic risk in the system, which is starting to be unwound.
Well, there's been, the BOJ has been coming under fire, especially with the market sell-off in the past few days, that it pulled the trigger too early. I mean, if you look at the data, maybe inflation, kind of in line coming up, but consumer spending is still weak in Japan. And there's also been criticism that the BOJ might have been, listening more to some of what these top politicians in rare statements coming out and talking about the yen weakness. Maybe they were playing into that crowd. What do you make of that?
Yeah, so I guess there's a big generational shift that needs to take place in Japan. One thing is just corporates getting used to passing on price increases because you had deflation for so many decades. So I think just with the weakness that you saw in the yen for such a prolonged period of time now, going back really to about 2022, there was the risk that you kept getting higher inflation from imported energy costs. So I do believe the Bank of Japan did the right thing moving. It was seen to be a little bit hawkish, moving 15 basis points on the policy rate versus 10. And they're looking to reduce their essentially QE by half over the next couple of years. Again, I think it was reasonable what they did, but what will probably happen now, given the market moves that we've seen, is that they're a little bit cautious with their next policy moves from here on.
So no hike in October, is that what you're saying?
It's looking that you'd have to see some pretty strong data, I think, again, perhaps on wages, but that's already through now for, I think, to make another hike in the shorter term over coming months, just given some of the extreme moves that we've seen.
Well, speaking of central banks, RBA decision later today, Nick. Given everything that we've seen in global markets over the last couple of hours, what are your expectations here?
I would say that they're going to be on hold for now. We did have some inflation data that just came out that was a little bit lower than expectations over the last fortnight. It is higher than, again, most of the G10 with true mean inflation or core inflation closer to 4%. But I think they're most likely to be on hold for now.
What about what we're seeing in the rebound in Japanese equities? I think we're seeing the Nikkei up 5%. Do you think this is going to be sustainable, given how, we need to kind of get a sense of how much further strength we can see in the Japanese currency, the unwinding of carry, before this, we can determine whether it has legs?
Yeah, well, I guess what happened is it triggered a massive deleveraging event. So there's going to be some reversal of that. There was very crowded positioning in kind of short yen, long Japanese equities. So again, that was unwound and a bit of that will start to come back. So it's hard to say for now exactly how that will transpire over coming days, but it was very, very sharp. Again, as you've said, just even with the equity moves yesterday, down 12%, you would expect some recovery in the shorter term.
Nick, thank you so much. Nick Schoenmaker there from Drummond Capital. Israel is bracing for a possible attack from Iran. This would be in retaliation for those assassinations of officials associated with both Hezbollah and Hamas. Let's take a closer look now with our guest, Monika Bičkauskaitė. She is the Public Policy Director at Key Elements Group, and she joins us from London. Monika, thank you so much for being with us. What is the degree of risk right now that this is going to escalate quite dramatically?
Yeah, so thank you for having me, first of all. An escalation and all-out war is not in the interest of any player in the region or the US. However, right now we see that the stakes and temperatures are really high in the region and things can get out of control quickly and not in a calculated way even. So now further escalation will really depend on Iranian coordinated action, given that Iran and its intelligence services have been humiliated with Israel's assassination, as you mentioned, of Hamas political leader Ismail Haniyeh. And because of that, Iran's response can be greater than what we have seen, for example, in April, on April 13th, when Iran also warned Israel of a missile strike and executed the strike. However, it was intercepted by the Iron Dome successfully. And this time it was unprecedented assassination of the Hamas political leader. It was sophisticated, done from within, and it indeed exposed all the weaknesses of Iranian security services and the regime, as well as humiliated Iran on the international stage. Because of that, Iran has promised to punish Israel, and it will take substantial action. However, we have to remember that Iran will be very careful of the actions and exact targets that it chooses, because Iran would not want the US to get involved and have a coalition between Israel and the West, because this is the type of coalition that the Iranian regime would not be able to counter and survive such retaliation.
Yeah, U.S. Secretary of State Antony Blinken was discussing the urgent need for de-escalation in the Mideast, and I'm wondering about the role that countries like Qatar and Jordan may play in this. Is there a chance for some type of diplomacy that will bring the temperature down?
So diplomacy, of course, always has a chance to bring temperatures down. However, right now the situation is extremely fragile, and diplomatic means may not simply be enough to lower the tensions. And a lot of countries now, including the US, of course, are pressuring Israel to go for a ceasefire deal, some sort of peace deal. However, we believe that it is unlikely at the moment, because both sides has reasons not to de-escalate and not to do it. For Hamas, again, they have been humiliated internationally because of the leader being killed by Israel. It was a high blow. And for Israel, they do want their hostages back from Hamas, but at the same time, they want to destroy Hamas. And because of that, it is very difficult to achieve both at the same time. And because of that, the escalation or ceasefire agreement does not seem highly likely, regardless of the other actors that are being involved and the US and international actors pushing for such type of de-escalation or diplomatic resolution at the moment.
It's been amazing that the demonstration on the part of Israel in the way in which it was able to assassinate one of these officials right inside Tehran. I mean, that goes a long way in kind of underscoring the capabilities that Israel has, does it not?
Of course, Israel has great capabilities, and this type of operation that has been planned for months, as you rightfully mentioned, it has been done from within. So this, in a way, unprecedented. And what it shows to Iran, to Hamas, to Hezbollah is that no one is really safe, because Israel definitely has means if it needs to take action and assassinate their leaders or other really important personnel, or even conduct other types of attacks. However, we have to remember that Israel also does not necessarily want to escalate into an all-out war. What they want is to stop terrorism against their country, and they are targeting specific targets, and they have concrete intelligence missions to do that.
Does the new president, Iran, who is perceived to be a little bit more moderate, does that change anything about the situation at all? I know that the supreme leader is carrying most of the authority right now, but I'm wondering whether the president could help in any way.
So as you rightfully mentioned, the supreme leader does hold the power in Iran, and at the same time, with having a new president, there is a chance that he will want to show that Iran is not, humiliated on the international stage. So I do not think that this will help in a way to de-escalate. If anything, this might mean that he will want to show Iran's power and to strike back simply, rather than de-escalate.
If you had to speculate, and I hate to put you in that position, what is the outcome of the situation that we're dealing with right now? How do you see this playing out?
So I do think that escalation is possible, because, as I mentioned, that in this situation, Iran will have to respond in some way or another. However, I do think that Iran will think carefully what type of targets to select, whether it would be infrastructure, civilians, or military targets, because if civilians are targeted, we know that Israel will also respond, and this will just lead to further escalation. And because of that, Iran might be more careful to choose specific targets. And we also know that last time when Iran was attacking Israel on April 13th, they have warned Israel about the looming attack. And this time as well, Jerusalem Post has reported that actually Iran has communicated via the Minister of Foreign Affairs of Hungary that they will be attacking Israel, and Israel has been noted of that. So if Iran was going for an all-out response, an all-out war, then they would not be warning Israel about the looming attack. So I think that the Iranians are calibrating their response, and whereas there will be a response, it will not necessarily lead to an all-out war.
We'll be tracking this closely. Monika, thank you so much for staying up late. I know it's 1:30 in the morning in London where you are, and we really appreciate you joining us here on Daybreak Asia. Monika Bičkauskaitė, who is Public Policy Director for Key Elements Group in London. This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.